Good morning, investors and traders. In today's segment, we'll be talking about the new coronavirus variant, Omicron, and of course, the stock market. If you haven't subscribed to our channel, I highly recommend you guys to do so. Apologies for a little bit of a down voice because I am still down with cold, and hopefully it's nothing serious, and I'll recover from this virus soon. Now, here is a risk warnings and disclaimers in front of you. If you have any questions, please feel free to go back to your account managers. Now, let's bring out the MT4 platform, and it is this particular sell-off that I am very much referring to. Now, just to give you a little bit of a background, Omicron is a new variant of coronavirus which is found in Africa, and stock markets on Friday, a day which was supposed to be a very quiet day, became an extremely bloody day because stock markets saw the worst sell-off of the 2021. We haven't had a sell-off of this magnitude, as you can see, going back all the way to 2020, and this kind of clearly showed that investors and traders were extremely worried about this new coronavirus variant, because traders were thinking that, okay, we don't have a vaccine, we don't know if the current vaccine is going to be working, and when the new vaccine will come, how long will that take. So a lot of that exuberance was in the market. What that did in terms of the market's price action, it not only pushed the market the prices for the US 30 below the 50-day simple moving average, but we also saw the prices crossing the 100-day simple moving average and kissing or violating for a very brief period the 200-day simple moving average. At the same time, we did also see the prices, the RSI dropping to a level, the one that we haven't seen back in September 2021. The RSI was clearly oversold, and now today we do see the prices coming back a little bit, bouncing sharply back above those particular price levels. But what we really need to see is, can the price move above the 100-day SMA? And one way of looking at that would be to keep an eye on an intraday time frame, on the 4-hour time frame, and then see how far the prices is really going to go from here. Now, if I draw the Fibonacci from here, from the sell-off to here, if I do that, so what I see is that the prices have crossed above that critical 38% sort of a price level, which is kind of good. Let me just bring this Fibonacci levels. I just kind of wanted to get okay, so what we basically are seeing is that the prices are moving above that 38%, which is pretty good, because if the price can stay above the that particular 38%, then that means that it is pretty good, because the prices can really continue from there onwards. But if it doesn't, then that means I'm just gonna change the color of Fibonacci from, it should be red. I don't know why it is showing us in that color. Okay, let's delete them anyways, because we don't really need it anymore. Right, so basically the idea of Fibonacci is that if the prices have crossed above the 38% from the recent sell-off, that means that the current bounce that we're seeing in the prices is more real, i.e. meaning that the prices are more likely to move to the upside. But if the price kind of stops near the 38% price level, then that means that prices are actually likely to move further to the downside. But now, what we are really seeing is the opportunities, or the circumstances, or the odds are stacked in favor for the prices to move to the upside rather than to the downside. Now, it is also a time that we draw our important support zone, given where the prices are really trading. So now for me, the most important support zone in terms of the price action is going to be number one, just right over here, and the other support zone is obviously where the prices have recently been, and that is your 100-day simple moving average, or the previous sort of a resistance right over here. And in terms of our resistance, the first resistance is going to be on top of this particular candle. Now, because this is a resistance, so I'm going to change the color of these lines to red, so just to mark them very clearly on our chart, so we can differentiate between the resistance lines and of course the support lines. So this is our resistance, this is our support, this is our support area. Now the immediate battle in terms of the price action, as mentioned before, is your 100-day simple moving average. If the price can break above this one and stays above that, then we know that the price action is moving towards this direction. However, if it fails, then the price action is moving here or further to this particular price action. So these are the two particular price areas that we are very much focused on. Now again, I want you guys to keep an eye on this 4-hour time frame, because on the 4-hour time frame, what we kind of really wanted to do is price to stay above the lows of this particular candle, or it should respect the lows which were formed on Friday. We should not be falling below the lows of Friday. That is at least a minimum, that the maximum low that the price should be reaching, because a violation of this particular level is clearly going to open the door for the price to reach these particular price levels. So that is what we need to focus on. That's all for now. Stay tuned and we'll be back with more analysis next time. Thank you.